Good evening, Griffin Cooper here at Ablewaytech, September 12th, 2025, and I'm going to be looking at a long-term and medium-term analysis of IYR, U.S. Real Estate ETF. First thing we'll look at here is this dynamic sell-off during the 2008 real estate crash, where price dropped nearly 78% and went from 94.99 all the way to 2098, 78% drop. And this was followed then by a 16-year up channel on the long-term chart with the confirmed trend line at this point. We see the 1 touch, 2 touch, 3 touches. The power of a confirmed trend line on a monthly chart is pretty significant. The sell-off from the beginning of 2022 to the end of 2023 found support just shy of this 50% Fibonacci retracement level at 72.88, and the next leg up actually produced a lower swing high here, a lower reaction high. This was in the middle of 2024 at 104.04, and this was then followed by a higher reaction low, a higher swing low here earlier this year at 81.53. So this current sideways consolidation looks to be taking the shape of a symmetrical triangle. Now, that's a difficult pattern to use in forecasting, but more usually it's viewed as a continuation pattern. So our current view is to stay with the trend and the more likely upside triangle breakout. Although another touch of the trend line support around 86 would still be in line with the forecast. A break of this top line will need to be achieved soon to produce the vigorous next move, particularly with this triangle's break line sitting near this important psychological round number of 100. Adds a little more resistance there. I'd say a decisive, probably 2-day close below the last reaction low of 81.53 would change that view. Now let's move on here to a medium-term weekly chart. This one uses MACD signal line, and we also actually have put volume in there as well. Let's get to the chart first. The move off of this 2023 October low of 72.88 has resulted in a 1-year uptrend here that then started a sideways consolidation pattern in early of this year, early of 2025. It started going sideways and consolidating. This is a very interesting pattern here. But first, let's note how this recent rally off this April low of 81.53 up to here, that's actually led to a signal line cross of the MACD, where the MACD crossed its own 9-period EMA right here, and then also a zero line crossover signifying the moving average crossover as well. So confirmation with the MACD showing a sign of bullishness and that this trend is picking up some momentum. But as always, price comes first, and this current consolidation looks to be taking the shape of an inverted head and shoulders pattern. 2 heads in the middle, but still a lot of symmetry here. And this can be viewed as well as a continuation pattern. So we look for a break of the neckline of this pattern in the next few weeks, with a pattern resolution eventually of 120. Now, being an inverse pattern that will rely on buying pressure to resolve successfully, it's essential here then that the rally through this neckline be accompanied by a sharp burst of trading volume. That's why I added the trading volume indicator down here. So, and then any kind of failure to break this neckline in the next few weeks, or if we get a breakout and then a subsequent close below the neckline, would signify a failure as well, and that would change our outlook. So how would one play this? One possible strategy example would be if the volume does confirm the breakout with a sharp increase during the neckline break, and then a decrease of volume as well on the return move, that would be the confirmation of the pattern, and one could look to enter on the return move near this neckline. So after the breakout, a pullback on the return move near the neckline, and with a tight stop slightly below the neckline, perhaps even below the swing low at 93.64, and then a take profit of 120. And that's the analysis. For this weekend, September 12th, 2025, this is Griffin Cooper, Ablewaytech, signing off with analysis for IYR.